if you put your mind back over the last 3 weeks, the Dow's down 4,000 points. I think anyone forecasting that would have been, ridiculed immensely. The market, when you look at what's happened this year, we spoke about volatility. The Chinese stock market's off $3 trillion in value in 11 months. And there are so many different components of this. And you mentioned earlier, and I was with Mark Mobius a week and a half ago in Mumbai, and we were speaking about emerging markets. And India's really, this is a sweet spot for India. And you were mentioning why, and I think that you've got a forecasted growth from GDP, and you've got really all of your major frameworks are coming together. As other markets are melting down, you're in a growth trajectory. And I think that's going to be a shining light in 2019.
Peter, we'll talk about India in particular, but compliments of the season to you first up. What's changed? Like you said, no one would have predicted a 4,000 point fall on the Dow in 3 weeks. What's changed all of a sudden as far as US markets go? Because everyone's been talking about growth peaking out, some kind of slowdown concerns. Trump has been Trump for 2 years now. It's not the first time that he's lashing out like this, and Fed has now become his latest boy toy. But essentially, he's been doing that across various factors of the US administration. What's really changed in the last 3 weeks to turn sentiment so negative towards equities?
I think, Deepanshu, you've got to say this. We put our mind back to where the market was in September, and it was a different frame completely. You've had so much uncertainty globally since then with the ongoing issues as far as Brexit, what's happening with China, where does the Italian bonds play, US equities were exhausted to the upside, and everything's come back. And then you look at the crude oil market down 40% in 2 months or 2.5 months. So you've had uncertainty globally. You've had a exhausted market to the upside. And I feel as though that many sellers have got into the other side of the market and just shorting and, possibly assisting in the drive down there. And you've got so much uneasiness and so much, I suppose, loss of confidence in so many factors, which in turn are creating more sellers than buyers, and markets are showing true value at the moment. I don't know what the real reasons are. All I know is that I think that 19 is going to dwarf 18 in the sense of volatility.
Right. So, Peter, if we're saying that 2019, the volatility is going to be higher, global markets, you could see some bit of pressure that could still continue. There are concerns on Brexit. Now, taking this into consideration, what do you think will be the impact on emerging markets?
I feel as though that depends upon the meltdown as far as US equities. But you've got to put your mind back another thing, Hiral. Look, don't discount the fact that America has got unbelievable employment numbers. I mean, you've only got to see what they've done as far as their non-farm payrolls, and their employment is at nearly record lows. Then they've got the best year in history as far as share buybacks and dividends. So their stock market has performed extremely well, and you've had 6 or 7 years of a bull market. So it's exhausted and it's having a break. I'm not sure whether you're going to see a continued downsell or you're going to see the market move higher from here. But I do know one thing, that if the US market does go into a free fall from here, it's going to drag down a lot of the emerging markets as well, because people will turn to bonds. People will take the risk side of it will be very worrying, and gold will be the featured trade.
Peter, you'd have to say that Trump does have a case when he's pushing the Fed to not hike rates anymore. I mean, the way he's going about it is debatable, but even the real interest rate markets are now possibly factoring in no more rate hikes from the Fed. What's your sense here? I mean, should the Fed really now go slow with rate hikes? Because essentially, like you said, the growth has been exceptional this year, and the employment data has been very, very strong as well.
It depends. This is it. Don't forget that Trump is possibly a little unusual, but remembering that the mantra coming from most presidents to Fed chairs is always a level of hostility when you're seeing rate rises. The last rate rise was last week. It was the 4th for the year. But more importantly, all of those Fed chairs, all of those members of the Fed Reserve, the FOMC, they all were unanimous in their decision-making. There was not a mixed camp, some wanting a raise and some wanting to sit on the fence. They all wanted to see a raise. Now, the market is saying, are we going to see 2 rate rises next year? Are we going to see 1? Some analysts are even saying, are we going to see a cut? That is yet to be decided. But as the year works through for 2019, it's going to be a work in progress to see where the economic cycle is. Is it exhausted? Is it in a retreat? Is it in bear market territory? Or are we now going and it's strengthening again and it's a continuation of this bull phase? No one really knows, but we do know one thing, that there's a lot of uncertainty on the global front, and President Trump is really, through Twitter and other mechanisms, creating a sense of uncertainty to the market.
With this then, Peter, what's the sense that you're picking up with regards to the dollar as well? Because you've seen the dollar move higher through most of 2018. After it made a low of almost 88.15 in mid-February, you've seen the dollar index, which has made higher lows and higher highs after reaching a peak of almost 97.7 in mid-December. From here on, where do you see it moving? Because back then in early January 2017 as well, we'd seen a peak of almost 103.8, and after that it fell by almost over 15% before it found a bottom in February 2018.
Well, exactly, Hiral. It's up 10% since February, sitting at the moment about 96.50. Now, the other thing is you've had 4 rate rises this year. So that's got to be factored in. As the rate rises ratchet up, the strength of the US dollar increases. And it's been very evident with those 4 rate rises. That's been a supporting mechanism to create a stronger US dollar. Have a look at the Indian Rupee. You were there. I was over there with you in Mumbai only a matter of a couple of months ago, and you're at 74. Now you're at 70. Now, and it seems to be that the heat's coming out of the US dollar a little bit, and certainly it's raising, you've got a stronger Indian Rupee. Now, if you only see 1 or 2 rate rises next year, or 1, I think that's going to put downward pressure on the dollar. I think it's going to be a plus for gold, and it's going to also take the wind out of the sails, and it may help President Trump in that regard. But it again comes down to the Fed. And if the Fed sit on their hands and they say, well, no, there's going to be no rate rises, that's not going to be a good thing. That's going to show fear into the market, and I think that's going to really impact the US dollar to the downside.
Peter, crude, what's the sense? I mean, like you said, 40% fall in 2 months. No one would have predicted that, but essentially there's some sentiments in the market, some trade channels also suggesting that after a couple of months, or maybe in the first quarter of the next financial year, you can expect a sharp uptick. What's your sense?
I was in Abu Dhabi last week. I spoke to oil analysts. I spoke to oil people, and I think that this has really hit them between the eyes. No one could believe what's happened, and that was last week compared to what's happened in the last matter of a couple of trading days. On Monday, the market was that heavily sold on crude, I couldn't believe it. I mean, I think it was down 6.5 or 7.5%. So it's been fantastic from a trading perspective because everyone's short the market. I mean, this has been an amazing trade. This is one of the greatest trades that I've ever seen as far as crude, down 40% since when Donald Trump came out, President Trump, in early October, and he said, I want OPEC to reduce the price of crude. And everyone thought, oh, that's not going to happen. Well, I'll tell you what. That was the starting phase, and it's been an incredible short trade since then, down 40%. So I think there's further downside for crude. I thought it would oscillate and it'd hold at those levels, but I think there's more fear in the market, and that'll probably push it down further from here.
Right. So, Peter, crude is something which is still working in favor of the domestic markets. Global cues are not supportive. From here on, what's your anticipation with regards to Indian markets? Because everyone is anticipating that there could be a mild correction that could come in the month of January. But from here, how's the fundamental view looking like?
Hiral, the fundamental view is quite simple. You've got an incredible workforce. You've got a young population that China doesn't have. You've got President Modi there with his hands on the wheel, and like him or not, you've got an election sometime in 2019. They say it could be May. They say it could be April. I'm not sure what day it'll be. And then the other side, of course, is that you've got, I think, 2.6 trillion GDP. You're forecasted by 2026 to double that number, which is just incredible. And so I feel as though that as all of those components for the long run, you might have, hiccups in 2019 and the market's down 10% or down 8% or whatever. But the long-term forecast, India is the place to invest in. You've got too many right things. You've got infrastructure. You've got everything is changing. You go down the streets of Worli in Mumbai for the people that don't live in India, and it's a transformation with underground railway and so on. That's going to crisscross Mumbai. It's going to be adapted across all cities across India in a state of probably 20 to 30 years. And that's just the first part as far as infrastructure. So I'm a huge believer, along with Mark Mobius, that this is India's century.
This is India's century. Peter, you have to make a final quick prediction for us. Boxing Day test in your neck of the woods, India, Australia. Who's going to win this one?
How dare you ask me that, Deepashu? How dare you? You know I've got to say it's going to be Australia. You know that. But I tell you what, I think it's going to be a very tough test. We're sitting 1-1, and I would dare say that I think that I wouldn't be surprised that you guys come out, India comes out and plays very strongly. The weather's good, everything's great, and may the best team win.